Greetings, market rebels. Welcome to this week's sector situation. It's Sunday, April 28th, 2024. It's a little bit after 11:30 a.m. here on the East Coast. I'm Wayne. Let's get right into it. Again, I'm trying to make these as quick as I possibly can. I think it's a little bit easier to do that this week. Unfortunately, and fortunately, intellectual property rights notice, trustee disclaimer prior to that. This week's notes in the macro measure video. Just a quick flash in case you didn't see that. And I reference something, you'll know what I'm referring to. Going to stop the share briefly, and we're going to switch over to a different view that is about the sectors. We'll start out where we normally do, but there's really not. Let's see, where's that one? There it is. Okay, yeah, let's get this on the right screen now. That would be screen 4. All right, so we should be good to go now. Usually we start out here, there just isn't a lot to pull from here at this point in terms of, well, hey, this is really overbought, oversold, that kind of thing. Everything's sort of in the middle, near 50 on RSI, just at a quick glance. And everything really is mixed, I think, overall in terms of what can you take away from it. Interestingly, things that we thought looked pretty good a few weeks ago, maybe they were turning, they did try to turn more. That was mainly the relative strength we saw in XLF and XLE, and those did try to perform. They were not stellar, right? But overall, in a week that was volatile, they did fairly well. So we'll give them that. The leadership sector that really propelled this rally in the earlier stages, XLK, after some rough stuff there, they brought that back as well. This was the interesting XLC, right, with the meta news, and they brought that really nearly right back within 2 sessions. So a lot of the things that they've liked, they came back after. Some things that were looking good on a relative strength basis, they came after. And then other things were interesting, like I think the XLP really kind of ripped nicely. Meanwhile, they did get a nice little bounce out of XLY. So those are both moving back up at the moment. XLP a little ahead of XLY, and that might be a little bit of a troubling sign, along with the transports, which were really, again, we talked about JBHT, nothing special happening in transports. Utilities, though, over here continued to really power, which we noted, like, given, right, that yields have moved up, that's really very interesting. Kind of tells you maybe there's some defensive positioning going on between there and XLP. Other former kind of like scratch your head, how are these things really ripping this much relentlessly names, which were XLI and XLB, the basic materials and the industrials. Those tried, right? They both tried, not bad, just not really a stellar week. Again, a lot of things are near 50%. We're probably still more towards the fear side of the equation in the market overall from a breadth perspective. So you're kind of in that, well, there's no extremes to really say, get ready for this possibly or that possibly. You're kind of in a mixed area. So I think on that note, we're going to switch over to a more in-depth chart, and you'll see here that on some of these, right, this is Thinkorswim switching on me to percentages, which I'm not sure why it keeps doing that on me, but you can see that the oil future here, light sweet crude, this did bounce off the 50, tried to work its way back up. It looks right somewhat similar to the XLE performance, but clearly this needs to move above here to start getting back on better footing. As long as it's tangled up here beneath the 20 SMA and above the 50, right, that's sort of more of a consolidation situation. The XLE has a similar price structure look to it. If it loads, oh boy, this is taking a while. And you can see that the 20 and 50 are also somewhat similar. So need to see this thing, right, try to put a higher low in versus this low and start working its way back up again. But as of right now, you'd have to say sort of still in more of a corrective phase at the moment. This would be the release point, right? Getting through 46, 53%. No, that's not what we need. I just really wish I knew what caused this. It's so frustrating. Anyway, I'm moving over to TradingView completely anyway, just a matter of time. That's about 97 on XLE. So I think same thing, or we're looking to see if a higher low gets put in there. But that to me it's in solid shape. The other interesting thing we kind of caught our eye last week was that copper had really powered, and it really, I think, continued to power. So this is a really interesting development, right? Because I wish I had the time. I don't know what's the main driver right now. I mean, other than, maybe it's just simple demand, right? Maybe it's just simple demand. Maybe it was undervalued. Maybe it's catching up. There's a lot of things there you could go into, but it's been really interesting. And that could be a good sign that maybe there's more, I don't know, stimulus on the way globally. That seems to be the only thing that these governments, and we'll leave it at that, know how to do, is to just goose, and worry about consequences later. But the kicking the can thing's been working for a very long time, so it's not as if they don't have a successful track record. Other than the fact that it really punishes consumers and savers and things like that, ultimately, excuse me, and leaves a lot of people behind. Ultimately, the smoke and mirrors just continues to work really well until I guess it doesn't. Let's see. There's something someone said that you can't print your way to real prosperity ultimately, but they sure can't be faulted for their attempts to try to do so. Anyway, that is up there. We should talk about, really, I think, probably going to be better off just going with the ETF. But we don't want to skip sector situation, don't want to skip a mention of this. If it finally comes up, this is GLD. This is the gold ETF. It has had, right, in a remarkable breakout run. So things kind of chilled in here for a while lately, last week mainly, and there was some paper that came in. I'm getting ready to start adding more long side opportunities, even if it's premature, because when this stuff gets on a roll, it can really, really go. And certainly geopolitical can bring about more volatility. And the reason I'm more interested in doing that than normal would be because it has been acting well. It had a nice breakout, and we have seen paper as well that helped tipped us off to it. It went from being dormant to finally perking up, 3 months ago, roughly speaking. But it really gets back to what we talked about many videos and quarters ago, when we brought up that this sort of had a cup and handle type pattern that was forming on the very big picture charts, the monthlies. And you'd have to go back, right, nearly a decade and a half, almost, not quite, but since this really began to start tracing itself out. And it's kind of launching through the top of the multiple handled view right there. So that's been a real burst. You can't rule out a little bit of a pullback clearly when you get that vertical over the course of a few months. But at the same time, I wouldn't rule out anything in either direction there, because like I've said, when this sector, gets on a run, it can really be powerful and aided by macro developments and geopolitical developments. So, both of which seem very interesting right now, to say the least. Silver, similar, right? So don't want to get into it too big, but SLV, right? We said had kind of had that inverted head and shoulders-y look, to go along with that being really the handle itself on a really extended handle. But it's got that similar cup and handle there. And this is another one that, when JP Morgan is out of the suppression business for a little while, this thing could really make a strong move. So I'm still keeping my eye on that. I want to put more ideas in on the UOA services for financials, for energy, and for these metals. And I don't know if they're going to fulfill their destinies. And I still think that they're still showing something, or trying to show something. recently. And so if this starts creeping back up, I really want to have some things ready to see if it's just, it's in another kind of corrective phase that it's been in, kind of pause, then pull back, and then go. Because this stuff, like I said, when it starts to go, the first phase might not have been wild, but it can get quite wild, and you can see some really just near vertical movement that comes out of it. But look, energy, right? I think this is also part of the inflation situation, but these things were maybe undervalued because of what's happened in terms of inflation, in terms of the printing. So you had energy, that started catching up. Copper's taken off. These precious metals have gone. A lot of that stuff's been happening. Let's look at housing and XLRE. We did have some paper come into this IYR. These are these real estate ETFs. We do have trades that we put in on these, but we got to take what comes in, right? We can't just freelance and say, oh, well, there was UOA on this, but we're going to go over here and focus on this instead. We figure that, the UOA has a purpose, and there's some value there to latching onto that as the vehicle. There are different, there's obviously different components, but both of these look similar, and both of them really have gotten themselves into recent trouble and are trying to kind of hang in there. But I'm trying to get more data for us. But you can see that maybe with the way the yields moved up, both of those started to look a little rough. They've been able to really weather the storm well, though, in housing. And this for the longest time. But they did finally put that corrective action in there. Again, I think with yields. Now it's sort of jumbled up, and you're right near what was formerly support in terms of our white line. You got the 50, you've got the 20. So this is very interesting because the 100, I think, acted as support just above there a few times. And now you're trapped between the 150 and 20, which is really downsloping quickly at this point, plus a resistance line there. So this is really tapping from the underside. This is really important because this happens a lot. And if they don't get through here, this can often be the sign that, there's a whole nother leg lower to come, because they were not able to really, you would think if they were still in bull mode, you should be able to make it back through here. If they can't, and they try and fail a few times, which, they've tried and they so far haven't been able to do it, it could be a problem. So really we have to watch out for that. I think getting back above the 20 starts, and holding, of course, starts putting you on better footing. It's only 1% away. It's not like it's going to require, a massive move, but that's what they need to do. Otherwise, right, it'll not really be a confidence booster if this cannot really reclaim all those SMAs, get back above the line that I just made blue and hold there. It really won't, right, engender confidence, and you could be right back in the 100 mode, and especially, right, depending on what yields do. So I think you've got to keep your eye on that. I mean, the way that yields have just kind of paused and held, there's not a lot to go on right now. And really the same things here in XHB. It's kind of had its little drop, and now it's sort of paused and held above the lows, but it's not moving back up quite yet. Maybe this is the week that brings it. I'm trying to think of what else I can really share. We should probably go through our main ones. I think XLF is another one. It's sort of similar to me to XLE given that it really had that steep sort of pop that just persisted, kind of a really steep run, ultimately ran into some trouble, and now, right, trying to work its way back up. Now we have to just think high or low, try to go back up and test those highs, or is it a possible low or high here? And if it starts losing support, it's in bigger trouble, right? Then you're back in retest mode there. The 100 would probably come in with a 23.6 retracement that seemed to hold on the way down last time around. And that would be an issue there. If it couldn't hold there, that would definitely open it up to the next retracement level down. And again, we're not big traders on this. We do trade it, but everything's relative. Obviously, the options are very inexpensive to play, but really, I would say you should go look for individual charts that you think fit better, and you'll probably get outperformance from those relative to trading this. But again, nothing wrong if you'd like to trade ETFs. I'm just saying that I'd prefer to be in a small basket of stocks that fit my view rather than be in that kind of a grinder ETF. Technology, right? We don't want to see this former leader and really the most important area, along with, I guess, communications in the modern market, if we leave semis aside as their own thing. But you've got a lot of these SMAs that are now downsloping, waiting for this if it tries to pop. So it wouldn't be a shocker to me if it kind of got caught up in those and had an issue. So just be careful there. Remember, though, the reason why we can almost skip this entire video is because of all the wild cards. It doesn't really get much bigger than massive earnings reports mushrooming up this week, especially midweek into the close of the week, along with the FOMC. So we can slice and dice these charts, excuse me, however we like, but ultimately those wild cards and how they react to that, that's really going to probably tell the tale, unless news comes in from around the world or domestically that, you know, is a different, a real change. But otherwise, you know, we're just stuck in, you could get it all right and have a good beat on the charts. And then again, you could get very easily get trumped by an EPS reaction. And that's why, again, if you didn't watch Macro Measure, I'm just not a big fan of these kinds of weeks, because it's more, to me, it's more about speculation that takes you back to 50-50 than it is about having high probabilities of success, because your charts are, as you know, super reliable. They are very reliable, I think, if you are selective enough, if you wait during normal trading times. But when there's this many catalysts out there, they could shake and bake the market with, and they probably will shake and bake the market with. You're really at their mercy. And we saw what kind of gap, like from one day to the next, right? The gaps on XLC down and then back up. So that just tells you right there, right? Like, had you waited for a little more downside, you weren't going to get it. They made sure of that. And if you got caught off guard on that, you could have been, you know, you were still a long, true believer. You could have really been hurt on that Thursday, obviously, especially if you close. But there's really not a lot to say about this right now. It's the same thing, right, as XLK. It's all bunched up. You've got SMAs coming into play that probably will serve as resistance. And look, if you start seeing some of these things push through this with ease, you know, that really is a signal, because it shouldn't be that easy to push through with yields up where they are. I think if they're going to do it, this is the time for them to do it, though, because they've got that overnight lack of impedance. They can move things around much more easily overnight or in the morning before the market really opens. You know, the futures manipulation is well documented if you want to look for it. But XLV, right? We've seen this as more of a defensive name time to time, and it was doing great, but it's obviously struggled of late. It's also kind of enmeshed right between a few SMAs right now. Some of the key things like the 50 and 20 are declining. So again, doesn't bode well. But remember, this trend has not been cracked really in the markets. So I think you have to give the bulls their due until we start to see those lows, last week's lows, and ultimately the week before's lows under pressure. I would kind of defer towards the bulls because the trend is up. The fourth year of the presidential election cycle is the second best of the two, and that's the year we're in. And Yellen's about to get her hands on another $1 trillion+ that has a magical way of finding its way into the stock market. So that's going to keep things buoyed. Whether it's successful in completely keeping things buoyed or not, I don't know, but it can't hurt from what I've seen in terms of the evidence over time. But Staples really a little concerning there, right? Could be a double top though. But Staples really powered, and that is a little concerning, especially when we go with XLU, which also had, right, the last couple of weeks in XLU, it's done very well, which is a little concerning, right? These are defensive sectors. And one thing that's been the oddball that we've talked about is XTN, you know, and so this one just isn't showing anything wonderful. Now, with Amazon reporting, you know, maybe things will start looking better. Obviously, there's definitely a shipping element there. If Amazon has really good things to say, maybe that'll help. But it's hard to really say I love this chart. I mean, you may say, well, I like it because it's on support. I like it because it could be a mini double bottom. It could very easily take out resistance, which is very nearby. It wouldn't take much of an effort to get to the resistance level. But the problem is, right, even if all that stuff's true and all that starts working, there's a lot of SMAs that are going to be in the way again. And a lot of those are starting to roll over. Even the 200 in purple is kind of beginning to downslope. So that's not a good look in my mind for a key sector. So this is really becoming important. The next couple of weeks to me seems like it's going to be pretty important, because if this is really an unimpressive bounce attempt here, that may open the door to a whole kind of another leg lower. And if you get that leg lower just sort of brings you down towards this gap fill type stuff down here. That's just not a good look for the market to have your transports really struggling that much. Right now the transports, we closed last year up here, and it's not a massive underperformance in terms of you lost an incredible amount of ground, but you are down on the year, right? And if everything's according to everyone, it's the usual suspects, I should say, it's supposed to be this wonderful economy, but I don't think it is. I mean, I just don't buy it. I see too many problems. I hope to be wrong. I feel like there's just a lot of things that are off radar that they've tried to ignore, not cover, underreport, whatever you want to call it, that are concerning. I hope I'm reading into it too much, but I just really am concerned about really the whole debt level, debt servicing rates that people are paying versus the prices they're paying versus the lagging wages. It feels like they've priced so many things out of the public's reach, and so many people are tapping credit and they're getting delinquent on it, and it's excessive right now, and the rates on it are high, and that to me is just a worrisome sign. And it's been my contention the whole time that that's going to be the problem for this economy, and then ultimately the stock market. If there is going to be an issue, that's going to be it in my mind. Simple thinking, nothing special, but that to me all matters. I guess my hope is somehow, it's really not the same old thing that we've always seen, where they've just ran their course, that stimulus is all completely spent, the multiplier effect's over, and people don't have the confidence right now to go strong into things, and it's kind of like a retrenchment time. Hopefully that's not the case. I really do hope things are much better than my take on it is. But again, with these basic materials as the nice little bounce, that's fine. It's all well and good. They were doing really well. It looks solid for now, but it's also going to get caught up in these SMAs. And so this is becoming crucial. If this stuff really can't move back up and start reclaiming higher ground, you start to see failure near the 20 and it rolls back over again. That's got to start concerning you. Remember, I really wouldn't go full panic until, I wouldn't even panic then, but I would really start to get concerned if we start coming down towards these lows. That would be my area where it's like, now it's getting real again. So, but for now, you're out of the immediate danger zone. You just need to see, can this reclaim the 20 SMA and hold it? And if it does, right, that's a better sign. We feel like we're on better footing. We're further away at that point from really being in heavy jeopardy, because we're not near that key breakdown level of the lows of last week. XLI, not as impressive really as XLP in some ways, but in other ways, it does have a higher low it's working with, and it won't take very much to get it back above the 20 SMA. It didn't really pop as much towards the end of the week visually, but it did hold its own. It's right near the 20. That's what we need to see this thing reclaim, getting above that 20 SMA, feel better. This low from last week is close enough to the lows and flat, like a little mini flat line, I think, that's forming near there. So that 120 level would be a problem, right? And I think that opens the door towards more. There's a gap down here. You probably would be in the vicinity of that rising 100 and this gap that's noted there with the white oval. And then you've got a fib that comes in below there, and that seems very close to where I'd put another support line from previous action, near 114-ish. So that's that. But look, this is what we have to decide on. Is it going to be this kind of corrective activity and it fights its way through ultimately, and we're back into rally mode? which is what I think a lot of us would like to see? Or, right, is it going to get caught up, take out the lows, and then just keep going and correct more? And why it could correct more is really because the depth of this pullback hasn't been all that much. The depth of this one hasn't been all that much. So it really wouldn't be disastrous, right, if it did have a deeper pullback. In fact, I think it would set, if most of the market were to do that, it would set things up nicely for the rest of the year. Where you pull back so much that, yeah, now you have better values, and moving things back up from that point. If it's you can support it through the economic data, and the Fed commentary. If you can support it, then it does set up for that sort of rally, early fall rally that then pauses, get past the election, and then it resumes, and you usually finish strong in year four. Here's SMH, and I pointed this out in macro measure. I mean, this is really a big level right here near 220. Let's call it 224 just to make it easy. So if it can get through there, that's really a good sign, because then it's really dealing with this dynamic that's been in place, this corrective dynamic. It's really back more into rally mode, and it's put that corrective activity behind it, and it's holding up there. You're still not out of the woods, because, right, to really feel like you're making better footing, you need to take out the highs and keep going. So there are ways away from that. In fact, I think we were a couple days early when we published something back in here where the SMH had become so extremely stretched. It was the most stretched we'd seen in 7 or 8 years, somewhere in this week. And it wasn't there too long thereafter that they finally started to come after this thing. And it's been generally under pressure ever since then. And that's really about to be 2 months and counting soon. So, but the thing is, right, I pointed this out. I'm going to point it out and close on it here. NVIDIA being such an emblem of this market right now, this is really key, because I think NVIDIA is ahead of SMH. Excuse me. It has been a leader. Semis are the big deal. You can see that it's taking out resistance. There's not much. You could say, well, there's a flat line here. I do think at like 900. I would say the figure of 900 is a level. I think there's another one a little bit lower than that. I think it's near, and I can't get this to, Thinkorswim's really bogging down here. I shut down a lot of things to record the video too, but I think it's really more of a, I think right in here, there's more of a 90, like 906 to 908 level to me, right in there. That's the next one beyond 900 for NVIDIA. So at that point, I don't know what's going to keep it from, unless news hits. I don't know if they keep the market in rally mode. I don't know what would keep NVIDIA from not attempting to work its way back up. I mean, it's been a very sort of, I think, productive correction or pullback here, right? That you come from 974, you drop down to 756. You can't call that a chump change correction. It's a legitimate, from the move that it made too, it was somewhere beyond 38.2% retracement. So a bullish correction, if you ask me, to this point, back above all SMAs. So this is your leader. And like I said, usually, right, when you're in a bullish mode, which we have been now for many months, I guess 6 or 7 in many things, and you've got the lead in, you've got your top dog stock, and you've got the lead into EPS, which are about 3.5 weeks away, something like that. This is usually a good thing, right? You can see the rally into earnings before. Usually, right, you get that. And if you get the normal rally into earnings by the leadership stock with the another rally into earnings, right? There's another rally into earnings, and what preceded that. So if you get that last kind of burst, the last several quarters, it's all been, the weeks leading up, there's been rally attempts. So I usually stick with things until they stop working, unless I have a good reason to not believe them that particular time. And someone may, I don't, because I don't follow this anywhere closely as I would like to, since it's such an important stock. But it is a very important stock, and it's the emblem, I think, for the market and what's been driving it, the hype factor. And they've got this thing breaking out through resistance. You can see our line. It just went right through there, shredded it. The SMAs, it's shredded. It's back above them all, and there's not a lot in its way. Like I said, you could pull a few levels out of here. I mean, I think 900, I do think that kind of 906 to 908 is there. But other than that, there's really not a lot in its way for it to really march right back. And that would be very, very bullish if NVIDIA did, clearly do that, and it would probably drag a lot of things along with it. So that's kind of a little bit more of a stock look. But I think it's important to note, even here in sector situation, because a lot of things will key off of this that'll help XLK. It'll embolden other things, and the gang will be feeling a lot better about themselves than they have been the past few weeks. So keep that in mind. I would keep watching the semis, especially NVIDIA, SMH. I would watch the TNX, right? And as long as yields and the dollar are kind of in check and not really hurting the situation, they're probably going to try. I think they're probably going to try to move this up earlier in the week, because they can get that good vibes going into the Fed. If they decide, they could then emphasize those with an exclamation point gap, post Fed, or strong move up. Or if they wanted to distribute and move things back down, they could take what comes out of the Fed on Wednesday and then use that for downside shenanigans to really recover in front of the EPS that will be released later on Wednesday, Thursday morning, Thursday. So again, I would expect a lot of volatility, and that's why I said it's really tough to get very confident about your technical analysis and forecasting things when you've got so many wild cards. I don't know what's going to move this market, but I would expect that there will be things that move the market. It's set up to have things that certainly move the market. So we'll see. So I hope this helped you out in some way. I hope it helps you out in this upcoming week or some week in the future. I want to thank everyone for tuning in. I want to wish everyone the best. Hopefully after this week, we can start getting back to things that are a little more concrete and a little bit more of a lean on what's most likely to happen. But I think you're just in for volatility and trying to forecast how they handle things. All you need to look at is Tesla, Meta. I thought Tesla kind of, you could say, well, they were already discounted. They were, but a lot of the bad news was theoretically out. But there could have been even worse news. You just don't know that. They jammed that on really not very good news. And then Meta, which seemed like things were generally in line, they trashed it, right? So it all depends on the gang having the final say, right? So I never really have high confidence in exactly what the gang will do with those types of situations. So I usually wait for this to be over and then really welcome the resumption of the normal behaving market. So that's my 2 cents on that. So everyone take care. Have a great finish to your weekend. Have a great week ahead. And we'll be back in touch. Thank you.